Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live at sktrading.live or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Welcome, everyone. I'm Stephen Kalayjian, and welcome to the Bull, the Bear, and the Ugly. Well, today we saw the NASDAQ futures up over 400 early in the morning. The S&P futures up nearly 100. But I took a step back, and I said to everyone in my community, of all our traders all around the world, I said, and I'm going to show you this pattern. You're making new highs here, and the MACDs are not confirming the high on the index futures. I say, let them have them. Boy, oh boy. I'm telling you, the whole world was a short. The S&P futures hit a high of 54.97 and 3/4. And by 12 o'clock, they were down to 53.91. Today, the tail of the trades were the 30-minute time frames, period. We got the extreme overbought condition early in the morning on the 30-minute time frames when the S&Ps, spiders, Qs, NASDAQ, throw a dart, were making new highs. But these MACDs on the futures contracts, the S&P futures, the NASDAQ futures, did not make new highs. And I said, this is a non-confirmation. Boom. And then what happened? 1 o'clock. Beautiful pattern, which I'll show you. The 30-minute time frames were the trades of the day. The 30-minute time frames got the deep oversold condition. First pullback on the 30-minute time frame after the 60-minute time frame reversed to buy on Friday. The 60, the 30, and the 15 are all in a bullish trend. Beautiful pattern on the S&P futures. The S&P futures traded 53.91 and grinded all the way up to 54.75, 76, 77 towards the end of the day. What a move. 100 plus down and nearly 80, almost 90 up. Unbelievable day off the 30-minute time frames. Now, you really don't see the 30-minute time frames do that a lot. Maybe you get one trade a day, maybe two. Today, we got two phenomenal trades off the 30-minute time frame, and I can't wait to show you. At 1 o'clock, when that 30-minute time frame stood up, Lilly was trading 735. Boom, up to 758, 759. Spiders are trading the 536, maybe 536, 530. Boom, up 50. Up more than that, actually. They rallied about 40, 50, 60 on that. Okay, $4 to $5, $6. You saw stocks like Microsoft was trading under 385, trade up to 390. Apple was trading, after Apple was trading 212, traded all the way down at the 1 o'clock bar. Apple was trading below 201.79, and then boom, Apple ran about $5 off that oversold condition. MSTR was trading around the 300 level. Kaboom, up about 10 to 12. Avago, off the 30 and 60-minute time frames, rallied to. Avago was lagging, but then the IWMs, which were lagging all day, on that 1 o'clock bar, were trading below the 184 and rallied near the end of the day up above 187 before settling back down on a big sell program. At the end of the day, the S&Ps dropped about 40. So today, there were remarkable patterns and so many things that I want to show you. So let me get right to it. So this is the push up this morning right here. You can see the S&P futures were trading 54.97 and 3/4 right here. You can see if I draw my horizontal line from here to here, or if I draw my global crosshair line, if I can do that right there, you can see that the MACD did not confirm the high. The MACD right here did not confirm the high. And I'm jumping up and down like a baboon. And I'm telling everybody, you got to be kidding me here. Look at this. This is really an unbelievable short. Unbelievable short. Okay. And you can see the short pattern, but the non-confirmation. Now, if you bring up the spiders on the 30-minute time frame, you would never been able to see that short. Okay? This is why I leave my charts up dynamically. I'm able to see things. One is an ETF that trades 9:30 to 4 regular session, and the other is a continuous contract that gives you the ability to see it on more than 23 hours in the day. So when you see that, I would never been able to know that that was a short at cell divergence. MACDs are above the pivot on the 30 and the 60. Here's the push up. Even here, the 60-minute time frame could not confirm the highs. The 60 right here could not confirm the highs. Okay? So this was a magnificent long, short. I'm sorry, this is a magnificent short on the S&Ps on the highs of the day. Now, we waited patiently. There were some longs, along the way here, okay? But watch this now. Now I'm going to shift this over to the spiders on the 30 and 60. This pullback right here around 1 o'clock, 12:30, 1 o'clock. We got the big buy reversal on Friday right here at 2:30. Look to your right. This is the first pullback on the 5-minute time, on the 30-minute time frame. This is the first pullback on the 30-minute time frame after the 60-minute time frame correlated with the 30-minute and the 15. Second, look at the oversold condition on the 60-minute into the positive MACD. This was an absolute Picasso. An absolute Picasso. If you see that pattern like that. That's an absolute Picasso. I say it 3-4 times because I want it to sink in. I want it to sink in. Look at the IWMs today. IWMs reversed to buy on the 60-minute time frame today at 10:30. You buy the first pullback on the 15 and the 30-minute time frame. Here it is. Here's a pullback on the 30-minute time frame. 183.05. Boom. $4. 1, 2, 3, 4, 5, 6, 7, 8 bars. Okay? Beautiful. Look at the oversold condition into the positive MACD. What I'm showing you here is staggering as far as how these patterns repeat themselves in sequence oriented, right? We do combination methodology, but then we do sequences of the way the pattern's set up based upon the way the condition is. We have 5 conditions, 10 strategies, all using intraday, the 15, the 30, and the 60 off my indicator 4. Then there's sequences, 5-minute, 15, 30, 60, and then it repeats if we're still in a big uptrend, right? Today was the title, the 30-minute time frames were it. IT. The 30-minute time frames really were remarkable in the way these patterns on the non-confirmations, unbelievable, and then on the highs, and then on the pullback, on the buy divergences, on the first pullback on the 30-minute time frame. You can see Lilly, explosive push up on the 30, right here, again near the 10 bar, oversold, positive MACDs on both the 60 and the 30, oversold. Trust me, when it was deeply oversold, but the bar pushed up because of this plot's end of bar. ADX is rising, buying pressure, yellow dots, first pullback on the 30 after, look at this, boom, right here. Okay, Friday, on Friday, this is the first, exactly the same thing as the spiders and the Qs. Beautiful pullback here in Lilly, 739. I thought it was 739 under 740, and it ran almost $19 in about 8 bars. Look at the Qs, same thing. QQQs pushed in right here below 53, and you can see the move up to 61. Beautiful long, almost $8 there. All right, unbelievable. Avago, AVGO, off the 60-minute time frame, and the 15. Now, Avago didn't really have that much of an umph here for some reason, but look here, oversold on the 60, and it still ran about $2 or $3 here in Avago. All right. Again, these patterns, like I'm showing you, are very, very powerful. MSTR, another great one. Here, MSTR. Look at this MSTR. Reverses to buy on Friday at 130. We waited patiently. Today, here's the pullback, 310. Look at that. I think we were looking to buy this under 301 and a half, 302. And you can see the move up. Almost more than $10 here. 1, 2, 3, 4, 5. 4. 1, 2, 3, 4, 3, 4, 5, 6, 7, 8 bars. Again, my strategies last anywhere from 1 to 8 bars. So now, again, when you get these strategies and you get these monster trades, the one thing I will tell you also is based upon using my indicator 4, I can determine if the highs are in for the day or if the lows are in for the day. Let me show you. Look at Microsoft, MSFT, 15-minute time frame. I'll bring it up here. Reverse to sell. The high is 394 and change, 394.65. When the 15 reversed to sell, the odds are 85% of the time the highs are in for the day. Now, you could have bought this here, as we did, okay? We were taking long trades against the 30 and the 60-minute time frame. So the algorithm reversed to sell. You were deeply oversold on the 15, the 30, and the 60. And Microsoft ran, you can see Microsoft ran about $7. But again, because here it is. Here's Microsoft. Okay. Now, if you look here, you can see when the 15 reversed to sell, I said to everybody in my community, we would be looking to buy Microsoft against the 30 and the 60-minute time frame. However, there's an 85% chance that the highs are in for the day. Okay. NVDA, beautiful. 60-minute time frame. Today, reverse to buy. Right here. Beautiful. NVIDIA. You look to buy the first pullback right here on the 15. Right? Here's a second pullback on the 15. But more so, look at the pattern on the 30. Right here. This is the first pullback on the 30 after the 60-minute time frame correlated with the 30 and the 60-minute time frame. Phenomenal pattern. Apple. Look at Apple on the oversold condition. Apple's trading 212 and change. We took shorts. You blinked. It was down tremendous. We were shorting this above 212.20, right? Look at Apple. Gets down below 02 and then rallies up to 06.60. More than $4 off this oversold condition. You can see it. Beautiful pattern. First pullback again on the 30 after the 60 reverse to buy. Monster pattern here in Apple. All right. These are phenomenal patterns. Tesla was negative on the 30 and 60-minute time frames all day. When Tesla reversed to sell on the 30, on the 15, it correlated to the 30 and the 60. You have a trend. Here's a short off the 15. Tesla gets overbought. I called this short towards the end of the day off the 15-minute time frame. First bounce on the 15 after the 15 correlated to sell with the 30 and the 60-minute time frame. You then went into, when the 15-minute time frame reversed to sell, you then went into a sell trend on Tesla using the 3 time frames. All right. Whew. Hot diggity dog. Man, was it a good day. These 30-minute time frames were it. I'm telling you. Really. This is why I have everything up dynamically. I could see things. I disseminate the information to my community, to family offices, hedge funds, prop firms. This is what I do. I love doing this. I love teaching each and every one of you. I spent nearly 10 years of my life building this, and I want each and every one of you to empower you to be great traders using multiple time frames, using my multiple indicators. Everything I do is based upon combination methodology. When I get back, I will tell you what I expect for tomorrow. All right, so tomorrow there is no 8:30 number. On Wednesday, we have retail sales, but we got one day to go, and we're off Friday, right? So it's a short week, all right? So with that being said, tomorrow we'll see if the market could stay in this uptrend on the 15 to 30 and the 60-minute time frame. Just to give you an example, right now the spiders closed at 538.97. Right now in the after hours, the market S&Ps just got hit here, but they just rallied about 15. We're trading 536.85. The algorithm reverses to sell at 523.75. Remember this number, 523.75 on the 60-minute. From where we currently are, that's 13 points on the spiders. That's 130 points on the S&P, which means the S&P futures would have to close below 52.98, roughly 52.95, 52.98 to get the 60-minute time frame to reverse to sell. Right now we're trading 54.22. I think it's unlikely. Okay, so what I like to do tomorrow, if we get any overbought conditions, I would look to short them because the MACDs are negative coming into tomorrow on the 30-minute time frames. Look at NVIDIA, MACD negative on the 16 to 30. Avago, MACD negative on the 16 to 30. SMCI negative on the 30 and the 60-minute time frame. Microsoft negative on the 30 and 60. Apple is negative on the 15 and the 30-minute time frame. These are the MACDs. Meta is negative on the 30 and 60-minute time frame. Right now, you have a lot of sell divergences on a lot of key names here. All right, a lot of key names. So for me tomorrow, right now, you have the 30-minute time frames looking like they're really looking to roll over here, but the 60 minutes are not over yet. They're still pointing up. So the bigger time frame is going up. The 60, the 30s are rolling over. So what that means, and I'll show it to you here, and I'll just show this to you really quickly. Here you can see the 30-minute, and here's the 60-minute time frame. So what I'm looking for tomorrow is, are we going to get a continuation on this oscillator to get overbought, or the 30 is going to start heading down into the algorithm, the overbought oversold oscillator turning up. But you see the number here, 523.74. That's 135 points on the S&P, almost 140. I don't see the S&Ps breaking 52.85 or 52.90 tomorrow. If you look here on just even on the 30-minute time frame, you can see 527.64 or 10. That means the S&Ps would minimum have to drop 100 points just on the 30-minute time frame. I don't see that happening. Okay. However, let's go to the bigger time frame, the dailies. Okay. Look at the dailies. We're getting overbought here. All right. You can see we evaporated the whole gap right from the low all the way up to the 10 bar. See how the market stopped right at the 10 bar here and here? Now, we are getting overbought. And if we do get a push up, when you get more overbought, I wouldn't mind seeing this gap to get filled, which is 5,600 right here, 56 right here. But watch this, though. This is the big problem right here. Look at the weekly here. The weekly is still negative here. And this is forming another bear flag here. You see this right here? You can see that we're forming a bear flag here. So with that being said, all right, with that being said, this market's got a lot of trouble here, even with these negative MACDs. But now look at the monthly. The monthly, they did everything they can, because don't forget, April 30th, if we close below this number, we're in for a lot of trouble here. It'll violate the uptrend since May 31st of 2023. So again, for tomorrow, I think we'll be looking again to see if we get any overbought conditions on the 30-minute time frame and the 60s into the negative MACDs here on the 30-minute time frame. If we do push up to new highs from today, you're going to have a non-confirmation because these MACDs are not going to confirm right here if you draw your horizontal line. So if we make new highs from today going into tomorrow, it's going to have a non-confirmation here on the MACDs on the 30-minute time frame. Look at NVIDIA. MACDs are negative here. MACDs are negative here. So any push up is going to run into a brick wall here in NVIDIA. Avago, same pattern. Meta, same pattern. Okay. Microsoft, same pattern. So a lot of the big names have the identical same pattern. All right. So this is what I'm expecting for tomorrow. This is how you read the market and how you get prepared for the next day. Again, no 8:30 number, which is crucial. Okay. But today, the patterns were off the 30-minute time frame. Picasso. All right. When I get back, I like to talk to you about how to size up a trade. So a lot of you who are new and getting to learn from me, this is, like I said, a marathon, not a sprint. And this takes time to really learn. But the most important thing is once you start learning and you're trading, whether you're trading micros or you're trading the big contracts, or you're trading stock, when you start seeing patterns like today on the 30-minute time frames, and you start seeing patterns that are just really understanding the whole system, the methodology. The 60-minute time frame reversed to buy on Friday. It correlated with the 30 and the 15. We got the pullback on Friday around 3 o'clock on the 15-minute time frame since it reversed to buy at 2 o'clock. Then today I was saying after that short, I said look for the pullback on the 30-minute time frame. 54.97 and 3/4, 53.91, more than 100 handles on the S&P. God knows what the NASDAQ did. NASDAQ was up 421 and then actually ended up down on the day, all right, and then rallied up towards the end of the day. When you start seeing patterns like that, all right, and there's no way looking at the yellow dots, which is the price within the algorithm, you have to learn how to size up a trade. Take advantage of it. Now, I'm not saying we caught the whole, practically 53.91 all the way up to 54.75 at the end of the day, 76, whatever the number was. I'm saying even if you caught $2 or $3 or $4 on the Qs, the TQs, $1 or $2, the SPXLs, $1 or $2, $3 maybe. All right. Palantir was a good one, rallied about $1.50. Apple ran about $4. Right. You have to learn what's called sizing up a trade. Right. When you get the oversold condition on the 30-minute time frame, you see the MACDs are positive on the 60. The yellow dots, which is the price within the algorithm, are nowhere near in that they're going to reverse to sell. People have to understand how to look at sizing up a trade. And that is really important, right? Because if you're going to take whether you're trading futures, if you're going to trade futures, maybe you switch to the big ones. If you're trading micros, maybe you add more contracts, basically off the bigger pattern, the bigger time frame. Again, you got to be comfortable and you got to be confident. And that's what I teach all day long. Learning the patterns, learning the indicators, the numbers to the right, the terminology, the strategies, and then the scaling in and scaling out. But again, I'm going to add with the scaling in and scaling out, a lot of people are still not familiar with how to use that ladder system, using that matrix, going in and out and clicking and putting the orders in. Okay. If you go to Google, you can type in TradeStation Matrix. You can see the matrix. It was a 49-minute video. I would say that that's something that you should look at if you never executed on what a matrix/ladder system. I'm old school. I call it a ladder. Okay. The bids on one side, the offers on the other, the prices in the middle. And you go, you want to trade, you go click, the amount of shares or the amount of option of futures, and you just click it and you can just put your orders in that way. All right. So sizing up a trade is very important. Understanding the patterns. If you're scalping longs, scalping shorts, that's different. But when a pattern unfolds, you want to be able to be in the game to the point where you're taking the position, you're confident, you understand just exactly what happened, and then being able to size up the trade. All right. Again, very key, because those patterns, once you are confident, and I'm here and I'm explaining what's going on. So for example, if you look here on the diamonds, the DIA, I'll switch this to the 5 and the 15-minute time frame really quickly. And this was a great setup. It really lined up across the board. The 15, the 30, and the 60-minute time frames, all bullish. Maybe switch this to the 5. I apologize. Here's the 5-minute. Here, the 5-minute time frame reversed to buy. You buy the first pullback on the 5-minute after the 5 correlated. If you bought the diamonds here, 111.12, boom, you can see ran 70 points. So if you're trading the YM futures, this is a very, 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 very bullish pattern. If you look at MSTR here, okay, about sizing up a trade, the 5-minute time frame correlated with the 30, 15, 30, and 60-minute. You buy the first pullback right here under 309, 309 and a half. You can see the push up here, up about 2. All right. Again, if you bought this next pullback here below 10, you can see the move all the way up to 13. So again, sizing up a trade. Again, sometimes you may only get, if you're going to scale in three or four times based upon the range, you may only get, one entry. But when you see patterns like this, when they have double blues or double reds or the terminology, or if you see a time frame correlating with another like NVIDIA did, when it pulled in on that 15 and 30-minute time frame, NVIDIA ran about $2. That actually a little bit more than 2. That is when you look to be confident enough to size up a trade. All right. With that being said, I want to say thank you for joining me tonight on the Bull, the Bear, and the Ugly. Please, please, please subscribe. Leave a comment. I try to answer as many comments as I can. Please go to my website. Look to join my community of traders. I had so many people today, new from all around the world. sktrading.live. Please follow me on social media at official Stephen Kalayjian on X, Instagram, and TikTok. And more importantly, I wanted to say thank you for allowing me to teach you, empower you, to be able to learn from me, take the experience, the wisdom, the knowledge I have. Then my goal is to make you all great traders and be consistent. Again, my legacy depends on your success. God bless you. Have a wonderful, wonderful night. And God bless the United States of America. Good night, everybody.
Thanks for tuning in to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe at sktrading.live or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.